Welcome once again to another edition of the Finance Forum with myself, Abdu-Raof Hanslo. And this week, we're specifically looking at business and securing our businesses into the future. So trying to mitigate risk and trying to lower the risk of eventualities in business. So my guest in studio today is Mr. Farouk Khan from Defining Moments Financial Advisory, and it's a branch of the franchise of Old Mutual. Assalamu alaikum to you, Farouk.
Wa alaikum salam, Abdu-Raof.
Firstly, I hope I got the introduction correct.
Yeah, we are Defining Moment Financial Consulting. We are a franchise of Old Mutual, based out in Brackenfell and Paarl, with various branches, but basically on par.
Okay. Farouk, today we're going to look at a very, very important topic, and that topic obviously looking at business. Now, we've done a series now over the last few weeks on insurance and the various insurance products to safeguard our community. To add to that, obviously, a lot of our community and a lot of our viewers are business people. And when ultimately looking at business, there's various ways of mitigating the risks of the eventualities that happen in business. And that includes covering oneself for these eventualities. So to start out, in doing my research now over the last 2 days for the program, I came across two different terms, and the one being insurance and the one being assurance. So I know that we're going to concentrate today specifically on business assurance, but if you could kindly just give us a synopsis of what business insurance is and what business assurance is.
Thanks for that, Abdu-Raof. Funny enough, in industry, a lot of people get the whole misconception of, and just bulk it together and say, we've got business insurance. When you speak to a client, he assumes when you talk business insurance, you're talking business assurance, everything in one. But there is a huge difference. One, business insurance looks at your assets, the business itself, your vehicles, your equipment, your goods in transit, those type of things, your movable assets, your property. So those things in the event of damage, loss, theft, that covers that. Your short-term insurance, that covers business insurance. When we look at business assurance, that is taking it to a different level. Business assurance says, is there a succession planning in place for the owner, being directors, members, sole proprietor? So when you look at business assurance, we say, are there things in place that covers the directors of the company? A typical one would be a buy and sell agreement between directors. Take, for example, 4 directors. Normally in the agreement would state that any director passes on, the directors that are left behind or are still alive has first option or first right to buy the shares, obtain the shares from that person that has passed on, or resigns. So business assurance looks at things like buy and sell agreements, incorporating buy and sell policies. Then we look at things like business contingent liability cover. We look at business overheads protector. We look at things like key person cover. So those are separate to your business insurance. And it's important to have those things in place, because everything you built up could be gone in the blink of an eye should anything happen to you.
So basically, well, my understanding of this is basically the business assurance is a sort of a continuity plan to make sure that the business ultimately runs after demise or dread disease or disability of one of the, how do we put it, important people of the business.
Yeah.
So how, and you know, this is one thing that we never look at in business. I mean, ultimately, if I own a corner shop, and I have a family, but I'm the one running the shop, there's no thought given to what happens to that business after I pass away. Maybe on my deathbed I realize, but I haven't made the necessary plan. So how, to stress the point, how important is it to have this type of cover when in business? And to add to that, the types of businesses, is it a must to have in certain businesses, or is it a must to have over the spectrum for all business?
That's a very good question, Abdu-Raof. Business assurance covers a very wide, broad spectrum. If you take lot of clients that has their own businesses as a one-man band. The family, the wife, the kids, are at times where they don't know anything about the business. So when something does happen to the owner of the business, nobody knows what to do with the business. And many instances you find that you might have a name, it's a good name, it's a good brand. However, the person, his clients has bought into him. When he is not there anymore, the clients lose that trust and faith into the business, that relationship. It's important to note that, you know, people buy into people. That's number one. Number two, we find that people, we fail to plan, but we don't fail to plan, but we plan to fail. The saying goes in terms of we don't plan to fail, but we fail to plan. My apologies for that. So what we do is we look at, there is no saying that my business is too small to be concerned about business assurance, or my business is too big. It covers from small to big, broad spectrum, whether you're a sole proprietor, whether you're a member CC company or a director company, PTY Limited. It's important to have those things in place, especially when you have other players or role players in the business as well. Just to elaborate more on an example of what we do is, you take a company that does the evaluations every year, they look at the business value of the business, and it's important even when you do an estate planning analysis for an individual. A lot of us do that. The question gets asked, what is the value of your share in your business, or your percentage share in the company that you are a member of or a director of?
Yeah.
So when you give that value, it's important to know that that becomes part of your estate. And the executor of the estate is going to come and say to the company, listen, my client that has passed away, the value is 2 or 3 or 4 million rand. So to give you an example of something that's quite important to have is, when you have a buy and sell agreement in place, it basically binds the guys together. But importantly, if you look at a company, say the value of 10 million, and you are 4 directors, everyone with equal shares. So you look at each person to the value of, say, 2.5 million. The question comes in, do the other directors want your family, your wife and kids to be part of the business as directors? Are they over the age of 18? Does the wife have any knowledge of the business? Does she have any experience in the business? Or what value she can be adding? And also, should you want to buy it out, do you have that 2.5 million rand? Because effectively, the 3 directors left behind, they need to cough that monies up and pay their estate out. So what we normally then do is we say, okay, let's do policies, life policies, including disability, to the value of 10 million on each person's life of 2.5, 2.5, 2.5, 2.5. Whereby should one of the directors pass on, that 2.5 million will pay out to the rest of the directors. But in terms of the buy and sell agreement, it forces them immediately to pay that to the estate. And that then buys over the shares. And that 25% that he owned would then be split between the 3 other directors.
Okay, now you've touched on quite a range of topics there. And I think that's a vitally important part of it, and that is when these specific individuals fall away that are key people. But I have a curveball for you, sure. and that is basically, let's take a financial advisory business, for example. So let's say you're a financial advisor and you're the CEO of a financial advisory company. And under you have a group of maybe 10 financial advisors. But one of them stands out and he obviously works for you. And one stands out because he holds the biggest book of clients and he has the most contact with those clients. So he obviously is a very important and integral part of your business. Can he be regarded as a key individual, and is there cover to protect your business in the eventuality of anything happening to that specific person?
Yeah, That is something that we come across quite often, because in each company there's always that key individual or key individuals, and they hold a very vital role in the company. Especially relationships, contracts are involved, and normally, should anything happen to that individual, the company would take a financial knock as a result of that. Now, to get somebody else to build that relationship with the clients or with contracts, to get the contracts, it takes time. So as a result, the financial loss is incurred. So what the insurance company has done, they've come up with something called key person cover insurance. It basically, you can work in multiples. You take the salary of the person, the income, you times it by 12, and you have a multiple of, normally we work on 7, so 7 times annual salary is the cover amount that you take out on that person's life in the event of them either becoming permanently disabled or passing away. That pays to the company that they can use to recruit somebody else and also assist with their cash flow.
And I think just to end up before we have to go to a break, Farouk, your comments on there's legislative differences between implementation from the government and choice by business. In the case of business assurance, is it a must? Is it illegal for a business not to have this type of cover? I know it's highly recommended, but is it a must? Is it set in stone by government to say that businesses have to have these types of covers?
That's a very good question, Abdu-Raof. It is not illegal. You don't have to have it. It's not a must to have, but it's a good to have. People ask, do you need to have insurance on a motor vehicle? If it's not financed, it's not necessary to have, but it's good to have because of anything happening. It is securing your loved one. It is securing your business that you've built up. So in terms of government, it's no legislation. There's nothing that forces you to have it. But as an advisor to any client, we always advise them to have it in the event of anything happening to them, to ensure succession planning and also to make sure that the dependents are okay, are left behind.
You're watching the Finance Forum with myself, Abdu-Raof Hanslo, and in studio today we have Mr. Farouk Khan. We're speaking business assurance. We'll be right back. Stay tuned. Welcome back to the Finance Forum with myself, Abdu-Raof Hanslo, and in studio we're speaking about business assurance. And my guest this evening is Mr. Farouk Khan from Defining Moments Financial Consulting, and it's an Old Mutual franchise. Farouk, before the break we had a hefty conversation concerning business assurance. I think the one important fact we didn't discuss in that time is accessibility to these products. Now, I've interviewed a tremendous amount of financial advisors that were sitting in that same hot seat that you're sitting in at the moment. Yeah. And the one thing that always comes out is advice is vitally important. So the analysis of the product and the needs of the client come first. So when it comes to business assurance, does the financial advisor still play that vitally important role? Or is it advisable for businesses to go directly to the companies who are offering these products?
Abdu-Raof, you can do a lot of things directly. However, it is vitally important to have your financial planner with you to discuss your financial planning in terms of business assurance. There are many aspects to consider when doing a business assurance planning. Example, estate planning, estate duty taxes. Is it a family-owned business? Is it a not family-owned business? The buy and sell agreement, is it a one-sided buy and sell? Is it a unilateral buy and sell? The partners that will be buying it, is it existing directors or is it an employee? Is it an external person? So there are many factors that influences the type of cover or the amount of cover, or the factors involved when establishing the need and the solution, especially where SARS is concerned, the South African Revenue Service, who stands there waiting
for their share.
And they're out there to bite. So you need to make sure that you do the correct planning and calculation, that when should the event happen, that you've covered all the angles. If you do not have a financial advisor assisting you with this, you could have missed a few steps, and it could have a heavy effect on your estate. And then who's to be blamed? So it's important to have a financial advisor to sit down and actually go through everything step by step by step.
Now I know that in individual financial planning, there's something called an FNA, a financial needs analysis, and there's also a risk analysis that's involved in that, and basically looking at the needs of the client. Now, obviously, when dealing with a business, it's a little bit different than dealing with an individual, because there's obviously a bit more rules to follow, and there's a bigger chunk to basically look at. So in this regard, how does when sitting with a client, when you sit with a client basically, what's the process that you follow in ascertaining exactly what type of cover is available, should be used for the actual business?
When looking at your financial planning and sitting down with a client, it's normally a good thing to also be the financial advisor for the director in his personal capacity, because it all starts with your will and your financial needs analysis that gets done for you in your personal capacity, that has an influence of what your wishes are there and in terms of your business. So it all lines up with each other, so you need to have that continuity and know exactly what is going on. So that it's important to be a key role player in both of those aspects. In my instance, I always try and be the advisor in my director in the client's personal capacity as well as in his business, to line up well financial needs analysis personal and his business assurance. When you sit with business assurance, you normally start with the first basics is the business assurance, being the buy and sell agreements, to make sure that is in place before looking at everything else. And then you normally start looking at, when you do the buy and sell agreements, or at least establishing the cover amounts, you look at the value of the business, you look at the shareholding. Loan account, important. Is there a debit loan account? Is there a credit loan account? That impacts who are the other parties involved in the buy and sell. Ensure that the buy and sell agreement is properly in place. Make sure that the policies are properly in place. So those are the factors that you always need to consider. So you need to sit. And what's nice is in the space that I'm in, is that Old Mutual provides free legal advice for us. So when I go to a client, I've got access to a legal advisor that specializes in business assurance. So from a legal perspective, they are there to assist me and also draft the buy and sell agreement, which would normally have costed the clients a lot of money had they gone to an attorney. And then we look at, from business buy and sell agreements, we then look at business contingent liability. And that is also something to...
Now you're touching on a few vitally important points, and I think the first thing we should do is define for our viewers' sake exactly what these products are. So you spoke about contingent liability cover.
Yeah.
What exactly is contingent liability cover?
Contingent liability cover is basically assurance or life assurance, disability or death, in the event that what happens normally is that when you have a business, you apply for finance through the bank, whether it be an overdraft, whether it be a loan, whether it be a high credit card, financing, anything. The banks require that you sign personal surety. Everybody, the directors they do an ITC check on the business, then also on the individuals, the directors. And also you will find that they request that you stand personal surety. Now, what happens is that should you pass on, the bank can request and pull that in and say that you have stood personal surety, the estate is now liable to pay either the portion that he is a member of his shareholding, or in certain agreements it states you are wholly and severally liable. So in other words, one person estate could be requested to pay the full amount owing to the bank only circumvent that by putting in place contingent liability cover. So what the insurance companies normally do is they ask us who are the banks that the company has facilities with, or loans with, or finance arranged with. We provide that, the cover amounts, and that is what, and as an advisor, I normally do a full cover on each person for that amount. So should the bank ask, the whole amount is settled. So the policy is taken out in the name of the company on the life of the directors for the amount. So that covers the debt owing, so that the bank doesn't come after your personal estate.
So basically, Defining Moments Financial Consulting, basically your speciality is business assurance. Do you look at any other products or other individual types of products that you offer to your clients?
Yes, I do. I do holistic planning. I look at your estate planning, retirement planning, investments, savings, tax-free, wills. There's many aspects, and business assurance. I specialize a lot in the business assurance side of things. I find it very intriguing, and I always say you've built up a business, but the sad part is that if there's no planning involved, everything you've built up could be lost overnight. And that is what I always aim at, to say, how do I protect your loved ones, and how do I ensure continuity of the business?
Okay. Now, when looking at the employees of a business, what products should an employer be looking at to, number one, safeguard the employer, and then secondly, to safeguard the employee? Yeah. Now, I know when speaking about the employee, we're probably looking at insurance products, but when looking at the employer, we're looking at assurance products.
Yeah. Many companies are implementing what they call group life, group pension fund, group provident fund. With that, a combination of group life, disability, funeral. So what happens is that the company contributes a portion and the employee contributes a portion. It's normally a multiple in terms of your life cover. So if you're earning 20,000 in a month, they normally say 20,000 times 12, times that by multiple of 3, 4, 5, depending on the company. So yes, the company normally does group life cover. There's also, when you have a key individual, that they have key individual cover, but that's more for the company to assist them during this time in recruiting somebody. And normally when you are headhunting somebody, it comes at a higher cost than what you were paying. But coming back, yes, it's important to have group life cover and group pension fund. One is to assist your employee to build up their pension, the retirement. And two, to ensure that should anything happen to your employee, that their family is well covered. And them not knocking at your door saying that my husband or wife has worked for you and we are now left stranded.
Farouk, in conclusion, any advice for our business owners and our business people?
In conclusion, yes. Ensure that you are up to date and you do have your sit down with your financial planner. Look at your business assurance. Make sure that your buy and sell agreements are in place. Your buy and sell policies are on par. Your key individual covers, your business contingent liability covers, and make sure that all those things are in place. We're now going to silly seasons, holiday time. We're closing down business. We're going on holiday. So make sure that before you close the doors, that all your things are in order.
You've been watching the Finance Forum with myself, Abdu-Raof Hanslo, and my special guest in studio, Mr. Farouk Khan from Defining Moments Financial Consulting, and that's a franchise of Old Mutual. We've been speaking business assurance, and I hope that you've taken note of the points put out by my guest this evening. From my side, until next time, stay focused to your finances.